let's start off with all the news that is emanating from the banking sector. And it seems that the enthusiasm that we saw initially about those banks that had been bailed out, we're seeing a reversal in sentiment at this stage. And what many investors are saying that certain banks have become untouchable, such as Intercontinental Bank and Oceanic Bank.
Yes, I think what we're seeing right now is that some initial investors had an initial look at the banks and look at the balance sheets, and they realize there's a quite serious negative capital in a lot of these institutions. And for any investor, it doesn't really make sense to bring in new equity to fill up a negative equity gap. So what investors are trying to say to the central bank and its advisors is that you have to, either through the AMC or through another instrument, fill up the negative equity. Once you have negative equity back to around zero, we can then bring in fresh equity to build up some capital reserves and take over the banks. I think that is really the negotiating point now for most investors.
So at this stage of the game, we don't really know what the fate of these companies are. What do you think the next move should be for investors that do hold Oceanic Bank, AfriBank and the likes of Intercontinental, the companies that are under pressure? And we also know that banks have come to the fore and have tried to raise quite a bit of capital, especially those that have come under pressure from a capital adequacy perspective.
I think for most investors, especially Intercontinental, Oceanic, those banks, with their branch network and a current asset base, there should be, as long as CBN and the advisors make them attractive to new investors, there should be some bidders coming through. I mean, the worst case scenario is that they go through NDIC, liquidated, and maybe the assets then sold off to investors. But that's the worst case scenario CBN does not want to go into. So I think a lot of the negative publicity about those banks could be a negotiating posture by some of the investors to try and get CBN and the advisors to be more accommodating in setting up these banks.
Well, we do know that the CBN has a new thinking when it comes to the financial sector and basically trying to separate banking functions from non-banking functions. First Bank Nigeria is proposing a massive restructuring as well. Do you think that it's going to be net positive for First Bank?
I think it will be. I mean, CBN came out with this draft outline for the banking industry going forward with the bank holdcos, and then trying to separate basically the commercial and retail banking from more risky investment banking in terms of managing the risk in the banks. And for First Bank to come out so quickly after those draft proposals, which with a structure and path to lead to that, shows that their strategic team is on the ball. So I think that's comforting for First Bank investors. Now, there are lots of other issues to do with this, because they're talking about the listing the First Bank and then listing the holdco company. There are a lot of costs, legal ramifications, who's going to have the shares, a lot of issues that have to be sorted out. But I think they've shown a clear path of how they want to achieve CBN's new draft policy. I think that's encouraging for investors.
Looking at Ecobank, a company that has also been in trouble for some time now. We had results out yesterday, not looking too robust. Your view on these numbers, and also we're running out of time, so if you could also just touch on Lafarge Cement as well. That company also came out with some interesting numbers yesterday.
Okay, on Ecobank's results, they had a PAT loss of minus 4.5 billion. I don't think it's much of a surprise to analysts. Ecobank have had problems with non-performing loans, and their provisions have been quite high. I think what investors are hoping and shareholders are hoping is that this is a base figure, and going forward they will build on that to improve the results going forward and curtail their risk management so that their provisions are less. And the Lafarge WAPCO was a bit disappointing because their Q1 forecast was for around 15 billion turnover and 3.18 billion in profits. They only managed to make 2.8 billion in profits and 12 billion in turnover. They haven't provided much detail into why they missed their targets. But I think we'll probably find is more to do with increased costs from power costs and other maybe financing for their debt instruments that's caused as increasing costs for them.